Hello everybody and welcome into the NinjaTrader Ecosystem webinar room. My name is Ryan Lai and I work in the NinjaTrader Ecosystem team. And I'll be introducing the event today. Before we get started with today's event, I would like to take a moment to test for picture and sound. So if you can hear my voice and if you can see the bar analyzer slide on the screen, can you please type the letter Y into the room, and that'll confirm that you can hear my voice and see the projection. All right, looks like it's coming in. Thanks for confirming that for me. All right, so today, thank you for joining up. We have a very special event for you today, and that's going to be with Lee Leibfarth of Bar Analyzer. And before we get started with today's event, I would like to do a quick poll, and that's just going to help me get a gauge of the type of user in today's attendance. And the question is, are you currently using NinjaTrader? So you can press the green 1 if you have a free license key, press the red 2 if you're using our lifetime license key, press the orange 3 if you're leasing a live license key, or the blue 4 if you're currently not yet using NinjaTrader. And while everybody fills out that poll, I'd like to mention that it is important to understand that there are substantial risks in trading commodity futures contracts or Forex, and you should carefully consider whether such trading is going to be suitable for you. And this will depend on your specific circumstances and financial resources. It is possible to lose all of the funds that you deposit with your broker, and you can even incur losses beyond these amounts. If you have any questions about these sort of things, you can always write in to the NinjaTrader brokerage team. And we also have a link here I'm posting into the room where you can look at the risk disclosure for more information. And you can also ask for a copy of the CFTC full risk disclosure. And also, please remember that the webinars that we hold in our room and the training webinars that we hold each day are not a solicitation for any sort of service nor a recommendation, but they're simply educational in nature. All right, then we have another disclosure I'll read really quick. This presentation today is being presented by NinjaTrader LLC, which is the technology company responsible for developing and supporting the NinjaTrader trading software platform. For NinjaTrader brokerage-related questions, you can direct them to the phone number 312-262-1289, or you can email brokeragesales@ninjatrader.com, and they can answer any of those questions for you. All right, thank you everybody for filling out the poll there. We'll just review the results really quickly. It looks like a majority of the people in the room today are using a lifetime license key holder, so it's great to see our high-value clients in the room that are interested in our partners event, or our vendors event. And for the few people in the room who have not yet downloaded NinjaTrader, I would like to encourage you to download a free copy. You can get started today for free, and you can use all the features of the software without having to pay for it for as long as you'd like. You can get it at the following link, ninjatrader.com/getstarted. Or if you're curious about leasing or purchasing a live license key for NinjaTrader, you can look at our Buy Platform link here. And if you didn't know, NinjaTrader is a free platform for advanced charting, market analytics, automated strategy development. You can also connect to a live data provider, and you can perform simulated trading on live data. NinjaTrader only charges for the platform if and when you decide to trade live through any of our supported brokers. And with that being said, we are very excited for this unique event today in which Lee Leibfarth of Bar Analyzer will reveal tips and tricks for successfully using strategy automation in today's markets. And I wanted to thank everybody again for taking your time out of your schedule to attend today. And without further ado, it would be my pleasure to welcome into the room Lee Leibfarth. So go ahead and please take it away, Lee.
Thank you, Ryan. I also want to thank everyone for participating in today's presentation. Hopefully everyone can hear me okay. My name is Lee Leibfarth from Power Zone Trading and baranalyzer.com, and I appreciate your time, and I'm excited to talk a bit about day trading automation with VSTOPS ProTrader. And as we go through this presentation, we've got quite a few slides to go through. So if you have questions, feel free to put those in the chat box, and I'll try to get to those questions. I'll try to get to all of them at the end of the presentation. So if you have a question, don't feel like I'm ignoring you. It's just that I'm trying to get through some slides, and then we'll cover the trades at the end. Okay. Great. Today's presentation is going to focus on automating short-term trading ideas. And many years ago, I wrote an article that was published in the February 2007 issue of Technical Analysis of Stocks and Commodities that was titled Tuning Intraday Strategies. And at the time, in 2007, trade automation capabilities were new to retail traders, and there were really only a handful of platforms that provided automated trading ability. To be honest, none worked particularly well for testing or automating day trading strategies. And now, a little over 10 years later, NinjaTrader has created really one of the most powerful platforms for short-term trade automation and for analysis. What we're going to talk about today is really, we're going to be looking at a product that we've developed called VSTOPS ProTrader. And at the beginning, we're also just going to talk about some theories involved in automating short-term trading systems. So while we hope that you're interested in our products, even if you're not, we still hopeful that you get something out of today's presentation. And today is May 4th, which is a official Star Wars Day, or the May the 4th be with you Day. So if you happen to notice some Star Wars references thrown into today's presentation, that might be why. Okay, I do need to point out our disclaimer, and that this presentation is for educational purposes only. The first concept that we'll cover is that automated trading requires a strategy. And a strategy is essentially a set of rules that define all trade entries, exits, position sizing. And for discretionary traders, this is known as a trading plan. For automated or system traders, we call this a strategy. And so now let's discuss what automated day trading really is, or better yet, what automated strategy trading is not. And many traders think of black box trading or high-frequency trading when they hear automation, and that there's a robot making trades through their trading account without understanding why. And today's strategy automation, it does not need to be a black box system. In fact, traders can develop or customize strategies for automation and still maintain full control and understanding of why the strategy is making trades. In other words, it shouldn't be a mystery why your system is trading. So instead of the evil robot account terminator or Darth Trader, you can use a strategy template like a VSTOPS ProTrader strategy template to jumpstart your automated trading without losing control. I would like to explain some advantages of automated trading in using a strategy. And here you can see a chart of the E-mini S&P with the VSTOPS ProTrader strategy template and indicator built in. And trades like this example don't happen all the time, but when they do, they can make you feel like a Jedi Knight out there. And this is the trade that we're going to go ahead and use as a background here as we talk about some advantages of automating a day trading system. And the first is the ability to backtest. And this is really one of the most powerful benefits of using a strategy. And this is a process that refers to applying a strategy to historical data to verify how a system would have performed during that specific time period. And this ability to test on historical data is an incredibly powerful way to validate a trading concept or idea. And we always say, as long as the idea can be quantified, it can be backtested. Optimizing is the second, I think, major advantage of automation, strategy automation, and this is the process of finding the ideal values for a specific strategy setting. And this involves entering a range of specified, going to the strategy and basically entering a range of settings that are available and allowing the computer to do the math to figure out which value would have performed best. This could be things like values for the indicator, it could be a profit target, it could be any element really within the strategy. And when we do this, we're allowing the computer to kind of make some, to kind of iterate through and kind of answer some questions for us. And we can even do what's known as a multivariable optimization, which is this is basically using two or more variables combined to determine what level together would have achieved the best outcome. And this process, when done correctly, can answer important questions about what the best settings are, markets, intervals for a strategy. Next is achieving consistency. And I think one of the biggest challenges in trading is sticking to your trading plan. And even if a trading plan has the potential to be profitable, if you ignore that plan or the rules of that plan, you're altering the expectancy of that system. And so a strategy allows traders to achieve consistency by trading exact rules. In addition, pilot error is minimized. And in order to buy 100 shares, for instance, probably won't be incorrectly entered as 1,000 shares. Minimizing emotions. Strategies can minimize emotions just through the trading process. By keeping emotions in check, you have an easier time sticking to your plan. Since strategies execute trade orders automatically once the rules have been met, you won't be able to hesitate or question the trade. And in addition to helping traders who are afraid to pull the trigger, strategies can also curb those who are apt to overtrade, buying and selling at every perceived opportunity. And finally, improved order entry speed. Since computers respond immediately to changing market conditions, strategies are able to generate orders, very quickly, very soon after those criteria are met. And getting in or out of a trade just a few seconds earlier can make a big difference in the trade's outcome. So as soon as a position is entered, it's possible that all other entries could be automatically generated, including protective stop losses, profit targets. And since markets can move quickly, having a trade reach a profit target or blow past a stop loss, it can be demoralizing. Um, Having an automated strategy can in many cases prevent this from happening. Now, we talked about some advantages. Here are some of the realities of automated trading. And in some cases, this may challenge some concepts of system trading on longer time frames. Day trading strategies should be customizable. And this just allows strategies to be tuned to specific trading styles and risk tolerances. Also, markets can adapt quickly to profitable signals. And over the last 10 years, automated institutional trading accounts for somewhere between 50 and 75% of all trading volume. Day trading strategies can be specific to a market or time cycle. And this challenges the concept that strategy must be robust in order to be profitable. And robust is a trading term that defines a strategy as performing equally well on multiple markets or time frames. And in many cases, for day trading strategies, they can be specific. Now, I know a few minutes ago I just said that backtesting is one of the greatest advantages of a strategy. Well, backtesting performance does not equal real trading performance if not done correctly. And we're going to talk about ways that we can improve the probability of successful testing, but in some cases it can be beneficial to detune a strategy to achieve better results in actual trading. And as I know you've all heard, past performance does not necessarily predict future results. And then finally, automated day trading strategies should not be left unwatched or unattended. And while these strategies, for the most part, will be running on your own server or on your own computer, they have a set of rules. There are things that can happen that can cause the strategy to again disconnect it to the markets. And so I think it's important, especially early on in the process, that the traders monitor this. And while most of us don't trade with anywhere near the volume of a high-frequency trading or a prop firm, just an example that pops up of things that could go wrong when you've got a problem with your strategy is that a few years ago, a company called Knight Capital was one of the kings of high-frequency trading and the largest trader of U.S. stocks. They accounted for about 17% of trading volume on the NYSE-listed stocks and about 16% on the NASDAQ. On August 1st, 2012, a new piece of trading software that Knight had just installed went rogue and started buying shares in 140 NYSE-listed stocks. And during a time frame of about 40 minutes that morning, Knight accidentally bought and sold $7 billion worth of shares. That's about 2.6 million a second. And each time it bought, Knight's algorithm would raise the price it was offering to the market. And of course, other firms were happy to sell at those prices. So by the end of August 2nd, Knight had spent $440 million unwinding all of its trades, or about 40% of the company's pre-glitch value. So while that's a pretty extreme example, I just want to point out, even on a smaller scale, we want to make sure we're monitoring all of our trades. So how can we automate a trading idea? There's really a five-step process that we recommend. The first is planning. This is just defining the conditions or rules that define how a strategy will trade. The next is test, and we've talked about this already, but using historical data, backtesting, and this will verify if the plan has potential. And if it doesn't, then we can go back up to the planning stage. The next is optimization, and this is the process of adjusting the strategy in an attempt to make it more efficient, or basically to find those values that will improve the efficiency of the system. And then a fourth step here is what's called walk forward. This can be also thought of as paper trading. So when we optimize the strategy, we're using a set of data, to test on that we're kind of familiar with, or the system gets familiar with. When we use walk forward testing, we're actually using data that the system hasn't seen before. So this just allows us a way to verify that our testing, works as well on unseen data as it does on data that we've already used. So in other words, it helps us to keep our strategy from getting curve fit. Now, if some point during this process we see that we're not getting the type of correlation that we want, this becomes a cycle where we go back to the plan, we go back to the test, we optimize, and we walk forward. And that cycle continues until we see the results that we need out of the walk forward. And at that point, we trade. And this simply involves automating the strategy. And in terms of rules, there will be no deviation from the strategy the way that it was planned or tested. And trading is really, I think, the easiest step in this whole equation, because once we've done our homework of the planning, testing, optimizing, and walking forward, then it's a matter of turning the strategy on into the market. Now, I'm going to kind of go through each of these steps in a little bit more detail. And the first one here, the planning step, this involves developing the trading rules and converting this into something that the computer can understand, or in other words, converting the trading plan into computer code. And another misconception about automating your trading is that you don't have to be a programmer to create a profitable strategy when you're using something like a tool like a template like VSTOPS ProTrader. Okay, what we've done is we've taken a lot of the programming out of it so that you can focus on adjusting your settings and looking for things outside of actually coding this. So that's, I think, one of the biggest advantages of using something like the VSTOPS ProTrader. And at this point, I'd like to formally introduce the VSTOPS ProTrader. And the VSTOPS ProTrader strategy template, it's a collection of powerful trading tools that are designed to help you build a profitable day trading or swing trading system and to harness the power of automated trading. And VSTOPS ProTrader, it's not a black box system, but a template for creating robust short-term trading strategies. And you can customize the system from a basic stop and reverse strategy to one that employs complex multi-exit money management tactics. And you can even reverse the entry logic to fit different market conditions. At the core of the VSTOPS ProTrader strategy template is the VSTOPS 2.0 indicator and bar color utility. And while the strategy will function without these indicators, the volatility calculations from these tools form the logic behind the VSTOPS ProTrader entries. And these indicators can be used to predict exactly where the strategy will enter and reverse trades. Okay, so I'm not saying it's going to predict where all of your trades are going to be profitable. That's not what I'm saying. I'm saying that it's going to predict where, the indicators are going to predict where the strategy is going to take trades. So in other words, you're not going to just see a buy signal happen arbitrarily. You'll be able to kind of track this on the indicator and see where the strategy would buy if it follows the logic. All right. And then the ProTrader strategy template allows you to define exactly what type of trades to take, whether it's scalp, day, or swing, what time of day you want to trade, as well as dollar amounts for risk and profit goals. And you can make use of backtesting and optimization techniques to quickly determine if these ideas would have been profitable in the past and to maximize the potential of the strategy in the future. And I mentioned, the VSTOPS being the foundation of this strategy. VSTOPS is an indicator that we released back in probably 2004, and this strategy is based on the VSTOPS logic. And as you can see in this As you can see on the slide that we have up here, intraday markets have a lot of noise. We see a lot of noise, and this slide is actually of white noise, but it kind of simulates what we're looking at in a lot of intraday market conditions. And what we're doing with the VSTOPS filter is we're trying to filter out that noise. We're trying to filter it in a way that allows us to create clear signals to what might be potential buy or sell locations. And so understanding this, we can kind of take a closer look at the market and see a little bit more about what this VSTOPS looks like when we apply it to an actual market. And this is actually a day from last week. We're looking at an NT8 screenshot. This is the E-mini S&P, and I think this is from last Wednesday's trading session. And as we look at the chart, this is kind of our basic candlestick chart. And as you can see, there's not a lot of direction on this chart yet. And where we want this to go is essentially the VSTOPS is intended to give some direction to that. Now this is the VSTOPS indicator applied to the chart. Okay, so now what we can see are a couple things. We can see that there's dots that appear above or below the price, as well as a color change, where green is representing long market conditions and red is representing weaker conditions. Now what we also see is that the dots that are on the chart represent a possible stop location, and that's why we call this indicator VSTOPS. Now, once the indicator is applied, we can kind of see that it's giving us some direction. The next piece of this is the strategy template. And the strategy is where these trades are actually generated from. And this is where we see the option to create different types of money management. And in this case, any time we see a blue dot or a blue bar, that gives us a sense of a transition between a long or a short. So these are conditions where ideally the strategy would look to take a position. All right, we're going to talk a little bit about trade planning, and I think the most important part of strategy planning is answering the questions, what, why, how, and when. And the VSTOPS settings, these are the settings that allow the strategy to define the VSTOPS calculations, and they're identical to the inputs that are in the indicator. And these values will have the largest immediate effect on the performance of the strategy, since they define the location of all trade entries and possibly exits as well. Money management defines the trade exit strategy and how the positions are handled during the trade. And these include position size, profit target, stop loss, break-even stops, and bracket exits. Performance switches, these are true-false switches that define how the strategy will perform during specific conditions. And these include allowing overnight trades, taking trades at the open, or reversing the logic of the strategy altogether. Time filters define the intraday time when trading can take place. And finally, the chart symbol and interval, this is just deciding, what to trade and which chart interval best meets your needs. So in talking about trade planning, now we're going to take a look at some trade examples to illustrate some of the possibilities and terminology used in trade planning. And again, we'll use the VSTOPS ProTrader as an example here. You can see how an example, see this example of how the VSTOPS can illustrate changing market conditions. Again, the green kind of representing stronger conditions, the red weaker conditions, and the blue representing a transition between the two. And the blues are where we're going to be focusing on our trade entries. So the first thing you can see is what's called a simple stop and reverse system. And this occurs whenever there's a VSTOP transition. So this would be taking a long trade and turning it into a short trade, and vice versa. So in this scenario, you're always in the market. In other words, you're always long or short, depending on the trend and depending on the direction of the VSTOPs. The next one that we're going to talk about, or the next type of money management that we're going to look at, is a single profit target. And this is when we're looking at a move where we're entering the market and we're using a limit order above that entry price in the case of a long trade to close our position. A double profit target basically does the same thing, but with two profit targets, one thrown on top of the other. And there is a question that I will answer. I think Faye just asked, what time frames are we looking at? These are all intraday time frames. Right now, I believe we're looking at a 5-minute chart. Previously, we were looking at a 610 tick chart. And so as we look at this 5-minute chart, we were looking at, again, we're trying to filter out some of that market noise to try to determine better locations. And in terms of our trade planning, we'll talk about some other tactics, and all these tactics are available within the VSTOPS ProTrader template. Okay. The next thing we look at is, so if we had a position, let's say we're in 3 contracts, we could scale out of these 3 contracts with 2 profit targets, and then the 3rd position would come out at the VSTOPS exit. So this is looking at kind of a more complex money management setup where we're using multiple profit targets, and then we're actually keeping our remaining position on to the very end. And the advantage to this is that a system like VSTOPS tends to work very well in trending markets. Volatility type of stops, and this uses a very fast adaptive volatility filter, it allows us to kind of get in a trend and stay in the trend. And so as we look at these green dots that occur below price, that kind of gives us an indication of where we should exit the trade. So if the trade falls down below those dots at any point, that means we exit. So in this case, we're looking at, a trade where it's reached our profit potential to reach 2 profit targets, and then as it falls back, we go ahead and close out with the VSTOPS exit. Now, the reason we would stay in with this VSTOPS exit is in case the market kept on moving. In other words, if this kept on going green and it kept on moving up, we would have that VSTOPS to help us stay in the market a little longer to stay involved in these trends. Stop losses, or also known as hard stops, I feel as a retail trader, these are a pretty important part of a system. And what these do is they just provide a hard stop so that if price goes below that level at any point, it's going to go ahead and close you out of that position. And this is just your worst case scenario. It's to help keep you from taking much larger losses. We can weather some small losses, but the big ones that could end a trading account. And you might ask, well, if VSTOPS already has a stop involved, why wouldn't you use that? Well, the stop that's in VSTOPS is based on a statistical standard deviation of price. And it works very well, but you might decide that there's a hard dollar value that you want to use as well, so that, let's say, we don't want to take a loss of $300 on any particular position. That would be an example of how you could use a stop loss in conjunction with the VSTOPS. Break-even stops are another method that's built into the template. And the way a break-even stop works is that it sets a value above the current market. So in other words, if we go in at our entry by the yellow triangle, we'll have a break-even amount that's set above that level. Now, if price were to move above that level, it would take our price, our stop price, and move that up to the entry price. So there's a point in the trade where you can actually move your stop up so that you're guaranteed that either you're going to make money or you're not going to lose any money. And so that's the purpose of a break-even stop. And we find that the break-even stops tend to work very well in conjunction with a profit target. So if you've reached a profit target, you can then push your stop price up from either the stop value or the VSTOPS value into that break-even level. And what you'll notice here is, as price kind of progresses with this tool, is that the break-even price will only be relevant for a little while, and then the VSTOPS price will actually be above that price, and that will be the one that will continue to track price as the trend moves up. And then the final one I'll talk about is really just a combination of some different exit money management methods. And this is what's known as a bracket. And this is when we use a profit target and a stop loss simultaneously. And the advantage here is that we can have a fixed risk to reward ratio. So we can set our profit target at a certain location from our entry price that's fixed and allows us to judge how much risk to reward we have. And in this scenario, price is going to do one of two things. It's either going to reach that profit target and we'll come out with with a nice gain, or it'll take the stop loss and will take us out with a bit of a loss, and we'll be ready to trade another day. And so obviously we're hoping for the profit target. But what's important to understand with a bracket is that once you've reached one of these, whether it's the stop loss or in this case the profit target, the bracket will automatically cancel the other order. So while we have two orders in the market simultaneously, once we've reached one of these orders, the other one will automatically get canceled. Okay, so it's just a, I guess a smart way to set up a risk to reward ratio, and at the same time the strategy can help manage those order entries. So not just placing the orders, but also canceling the orders if they're no longer needed. Testing is the next thing I want to talk about, and before we start testing, we have to determine how we will test, and this is a very important step that's often overlooked. And I find that traders often make the mistake of testing their strategies on every bit of historical data available to them. And when you're testing an idea on historical data, it's really beneficial to reserve a time period of historical data to confirm the validity of your testing. The initial historical data on which the idea is tested, optimized, is referred to as the in-sample data. The data set that has been reserved is known as the out-of-sample data. And this clean set of out-of-sample data is an important part of the evaluation process because it provides us a way to test the idea on data that has not been a component in any optimization. And as a result, the idea will not have been influenced in any way by the out-of-sample data, and you'll be able to determine how well the system might perform on new data. In other words, this might give us the best probability of seeing how this system could perform in real trading. So what I'm saying is that if we have access to 5 years of data, we don't want to necessarily test on all that data. We want to test on 3 years of that data and reserve the rest of it for what we call out-of-sample testing or walk-forward testing. So step one is that we determine what is our data set? What is the data that we're willing to test on? Okay. And these are some screenshots from the NinjaTrader Strategy Analyzer. And this is a great tool for testing the components of any strategy. And it's very easy to use, and it works very well with strategies. However, it gives us a wealth of information. And as we look at this, this is what we call a performance report here. We have a host of performance metrics. And I find that when you first look at this, it can be a little bit overwhelming, and that some of these metrics may not be as relevant to short-term or day trading strategies as others. And so we're going to focus in really just on those that I feel are most critical to evaluating a day trading strategy. And as we look at this, and when we're looking at the trades here, we see that first off, the number that your eye kind of gets drawn to is what's known as the total net profit. Okay, and this is the kind of the bottom line for your system. And for this, this particular data set, I think we're looking at about 6 months here. This system, you can see how it performed. Now, the thing I want to point out about total net profit is that it's probably the least useful of all the statistics that we're going to be looking at. Because while it does point out the potential of the strategy for this testing period, this back testing period, it doesn't really give us a sense for how efficient the strategy may be. So I think that for a lot of traders, they're definitely, it's easy to get blinded by this total net profit number. But again, I would encourage you to kind of look past that at first and to look for some other metrics that might be more telling in how efficient the strategy is. And the first one that I tend to look for is what's called the profit factor. The profit factor is just simply a measurement of the gross profit divided by the gross loss. Values, that are over that are greater than 1 represent a profitable strategy. Less than 1 is a losing strategy. So in theory, we want this number to be as high as possible. In reality, in sample simulations, it should be greater than 2. The values above 4, suggesting that the possibility of over-optimizations. The next is maximum drawdown. This is just the kind of the worst case scenario for this strategy. And this statistic is important just to determine if the strategy is even possible, given the size of a trading account. We want this number to be as small as possible. In systems that rely on very large drawdowns, basically should be avoided. The percentage of profitable trades, this is basically the number of winning trades divided by the total number of trades for a given system. And this value, this basically represents the winning odds of a system. And it really depends, this number depends on the system logic, but for day trading systems, we're looking for something that that is between 50 and 70% winning trades. Trend following systems tend to have slightly lower values. Systems that rely on very high percentage of profitable trades, like 75%, tend not to do as well in real life. So those are kind of the three big metrics, and then the average trade. This is essentially the expectancy of what you would look for in the system. In other words, this number, it varies, again, depending on the system logic, but we want in-sample simulations for this to be at least $30 or above. What happens if it's less than that, that the system just doesn't generate enough profit to be profitable over the long term. So these are just some general performance metrics, but these are the four that I tend to focus on the most, which is profit factor, max drawdown, percentage of profitable, and the average trade net profit. Optimizing, and this is something that is also a very cool feature of the strategy analyzer, that we can take a strategy, we can go ahead and optimize it, and when we're optimizing it, we're basically adjusting the strategy in an attempt to make it more efficient. And again, it's a way to kind of answer questions about the strategy. What is the best value? What is the best market? What is the best time interval? So by optimizing, it allows us to answer some important questions. I do need to mention that whenever we talk about optimizing, there's always the threat of what's known as over-optimizing. And what over-optimizing is, it basically creates a system that looks good on paper only. And really, with enough optimizing, virtually any trading system could show close to a 90% profit. Again, we could take a system and curve fit it. That's not what we're trying to do here. What we want to do is we want to have a robust system that gives us the best results, and those results stay consistent when we go from our backtesting to our actual trading. And I'm going to just kind of walk through very quickly a method that we would look at when using the VSTOPS ProTrader of how to optimize a system to try to achieve greater efficiency. And along the right-hand edge here, those are all the values within the VSTOPS ProTrader template that you can change, that are editable. And there's a lot of them. They go from all the things that we mentioned in the planning section to even looking at a particular interval. What time interval would be the best, or even what what values would be best for a particular time range. Over on the left-hand side of the strategy analyzer is a list of symbols, and these are the symbols that you could possibly test on. So we could optimize this over a whole portfolio of symbols to determine what the best, what the best performing symbol would be. What we're going to do right now is we're going to kind of look at some of the specific values and how I would approach an optimization using the VSTOPS ProTrader. And the VSTOPS indicator, which is what this strategy is based on, there's two major components of this, which is the period, or the amount that we're looking back, and the standard deviation. This is basically the distance between price and the adaptive averaging. And so these two values are really what's most critical to the VSTOPS setting. The other thing that we're going to look at is the actual time. We're going to say, okay, we want to look at, we want to see what time is most efficient for the strategy if we were to look at every time frame between a 5-minute and a 15-minute chart. So the way the optimizations work is that we set a beginning range, an end range, and how much we want to iterate. So for time, for instance, I mentioned we're going to start at a 5-minute chart, and we're going to go up to a 15-minute chart, and we're going to test every minute chart in between. So we're going to test a 5-minute, a 6-minute, a 7-minute, an 8-minute, all the way until we get to 15. And the computer is going to do this automatically for it. That's what we're that's what we're intending it to do. And so after we do that, that's going to give us our best value. And when we look at optimizations, there's what's called we have what's known as a fitness factor, which is the number at which it's going to optimize. And for a lot of traders, I think that we look at the profit factor. I think profit factor is an excellent way to measure efficiency when you're looking at these. And I know that also in NinjaTrader 8, you have the ability to optimize over a range. So it may not, you can optimize over several different fitness factors as well. In this case, we're just going to optimize based on the profit factor. Now, the other thing that we're going to optimize here is we're going to optimize what an ideal profit target would be and what an ideal stop loss would be. And we're going to optimize those starting at $25 per contract, going all the way up to $1,000 per contract, and we'll optimize those in $25 increments. So again, we're going to look at every profit. We're going to look at every profit target starting at $25, then going to $50, then going to $75, all the way to $1,000, to try to come up with what the most, what the most efficient value would be. So what would be most profitable in historical testing. And so once we get those numbers, and this is actually what we came up with, this is the optimization report here, it came up with $825 as the ideal profit target, and the optimized stop loss level is $950 per contract. So that, that kind of allows us to kind of look through a lot of data and come up with that. It also came up with the idea that, that the ideal profit, the ideal value, a time value was an 11-minute chart. So we basically went from having a lot of questions about how we can apply VSTOPS ProTrader to a chart to, after a couple optimizations, having some answers. We know that it performs best on an 11-minute chart. We know it performs best with a period of 36, a standard deviation of 2.5, and with a profit target of 825 and a stop loss of 950. So again, this is just a quick primer on how we can use this tool to look for what might be the best possible trading performance on a particular instrument. Now, I did mention, that we have, several steps involved in the phases of testing, and outside of the optimization, we also do what's called a walk forward. And what the walk forward does is, in our testing phase, our initial testing phase, we used what we called our in-sample data set. And so we tested on that in-sample. Well, now what we're going to do is, after the optimization, we're going to look at how this looks on out-of-sample data. This is data that we haven't tested on at all, haven't optimized at all. And what we might see is something that looks like this. And this is not necessarily a good thing. What we see is that the first 70 trades up until the yellow arrow, that's what we called our in-sample period. That's what we optimized on, and you can see that those dots right there, those green dots, represent equity peaks. So this chart is plotting the equity or the profitability of the strategy over the amount of trades. And so we want to see that line go up. We want to see those green dots. We want to see new equity peaks. But what we see is that after the yellow, once we pass that yellow arrow, all of a sudden it started to go down. So this points out that in this case we're probably over-optimized, that we've probably done too much work on curve fitting, and that the strategy doesn't look like it has any merit outside of that data set. So what this tells us is that we should go back to the planning stage and maybe do some more testing or maybe try out some more different options that will allow this to perform better in real life than it does in its historical testing. And in this chart, this is just showing some strategy optimizations along the way. Again, the yellow line here, or the yellow arrow, represents the testing period from where we did our historical testing. So everything from the left side of this chart to the yellow arrow is our in-sample data period. Our out-of-sample period is what occurs between the yellow and the red lines. And what we see there is that it continues on that same kind of equity growth. The curve looks very similar. So that gives us a good sense that trading from trades 100 on from the red over to the right, those are all trades that occurred in real time. So those were real time trades, and that's kind of what we want to see. Is we want to see that once we're done with our optimizations, we use that walk forward test to compare the data, and then we're hopeful that real trading is going to continue on in that same path. All right. I want to look at some maybe more specific trading examples using the VSTOPS ProTrader. And I mentioned that there's a lot of different ways that you can use this tool. There's a lot of different settings. And so I'll just point out a few of those. The chart that we're looking at right now is it's a 610 tick chart of the E-mini S&P. And in some cases, VSTOPS works very well in trending markets, but we don't always have trending markets. And that's the case right here. So you can see that the red and green transitions occur maybe too frequently for it to be consistent enough to want to trade it on a regular basis. So what we can do instead here is we can actually reverse the entries, so that instead of going long on the blue dots, we're actually going short on the blue dots, and vice versa. And in this way, we're actually, we're kind of fading this, if you will, so we can use this to kind of reverse the entries for choppy markets. So while while I said that VSTOPS, works well in these trending markets, it can also be applied to non-trending markets if, if we use some different settings. The next thing that you can do in choppy markets is we can add profit targets and stop losses. Again, sitting in, if we know that a strategy or a trade's going against us, having to wait to the very end can be painful. So we can set profit objectives here that, again, will help the performance of the strategy in these choppy markets. And choppy markets are difficult. I think that's maybe the biggest question I get is, how do you trade these? Well, they're difficult. And so there are some tactics that you can use, and this is one of them, is really to try to look for kind of the opposite effect of what you would normally see in the trending markets, and then apply some money management that might enhance that. Another way that we can use VSTOPs is not just through time-based charting, intraday charting, but also through activity intervals. These would include things like tick or volume-based charts. These are charts that are based on trading activity and not just time. So in a 610 tick chart, for instance, a tick represents a transaction. So a bar is printed for every 610 transactions that occur. So in this way, not only are we looking at price action, we're also looking at some volume as well when we're charting this. And VSTOPs can be again be applied very, very nicely to those types of market conditions. So when we're looking at activity-based charts, a lot of times it allows us to spot some better trending activities in markets that tend to have better trends. And so in this case, again, I believe this is a chart of the oil CL. And we're looking at some trends here, some intraday trends that VSTOPs had spotted. Something else that we can do to improve performance is to optimize trading times. We talk about the market certainly has the most volatility during when the U.S. equities markets are open and closed. But we can look at very specific points of time, what happens if we don't start entering our trades until 10 o'clock or 11 o'clock, and we can optimize based on particular trading times. And that's a very powerful optimization because there are times in the markets that have a high probability of reversing, and you can focus the strategy around those time periods. Renko charts, I get a lot of questions about Renko charts. I think these are becoming popular amongst intraday traders. And we actually created some modes for the VSTOPS ProTrader that allow it to trade in these Renko conditions. With time-based charts, we can use stop orders. With Renko charts, we can't really do that. So we have a mode that allows it to generate market orders depending on the Renko settings. And right now, I'll just do that again, we can see this is VSTOPS applied to a ES Renko chart. And again, you can see that it gives a very clear trend definition for those trending markets. What we see here is on the lower left, we can kind of see a trade that started. It hasn't actually ended yet. But that's kind of an example of how it can be used in Renko charts. The one thing I want to point out is that when you are using Renkos, you would need to use that market order mode as opposed to a stop order. And just to summarize, how we automate our day trading. First is just planning. This is when we're adjusting the VSTOPS settings and outlining our entries. Using this VSTOPS ProTrader template, we have a lot of different options to experiment with and to look at. So planning is step one. Step two is testing. This is when we backtest our strategy to create and evaluate our performance reports. Number three, we're optimizing. This is when we attempt to improve the strategy's performance using smart optimizations. And I say smart optimizations, again, we're not shooting for the moon here. We don't want to see, performance reports that are off the charts. We want to see good performance reports that have a higher probability of performing well in actual trading. And then walk forward. This is the use of out-of-sample or forward data to confirm our results from our previous, steps. And then finally, trade. When we're happy with results, you can automate the strategy. And one of the cool things about NinjaTrader is that it has a great simulated trading engine. So you can simulate, the ProTrader results and actually see, where the orders would generate in a fairly accurate way. So when we talk about trading, it can also be sim trading to see how the strategy would perform in real life. Okay. The last thing I want to mention is just that we have a special offer for all of the participants in this webinar, and it's a great offer, and it's valid for 1 week through May 11th. And keep in mind, you get if you have interest in ProTrader, we're offering 25% off of a lifetime license. And keep in mind with VSTOPS, you get the indicator, the paint bar study, the strategy. We have versions of this available for both NinjaTrader 7 and NinjaTrader 8. So if you purchase this, you can use it on NT7 or NT8. Your license is good for both versions of this. And keep in mind you can customize this to really match your own trading style, risk tolerance, and goals. And of course, you can still use the VSTOPS indicator in paint bar study to trade on a discretionary basis. Even if you don't want to, use automation, you can still use the ProTrader strategy template to test and confirm your trading ideas. And these tools can be used together separately. It's your choice. So with that, I will go ahead and open it up to any questions that you might have about strategy automation or VSTOPS ProTrader. Okay. Okay, so I see a question that was a little bit back there, and I think this is around the time that I may have gotten disconnected from you guys. Is there a table to show us how to read the results and how to use good results of the strategy? I think that, I kind of talked a bit about that in really using, the four, key performance metrics or KPIs that I use to evaluate day trading strategies. And that's profit factor, percentage profitable, average trade net profit, and maximum drawdown. I will say that, I also do look at the total net profit, but that's, as I mentioned, that's the one that I tend to use the least. So John asks, what, if anything, has changed, evolved with VSTOPS Pro since 2 years ago? We made a pretty major upgrade to VSTOPS. I think it was about, it may have been around that time. We're on VSTOPS 2.0. And so when we, I think we're actually using the same version as 2 years ago, but VSTOPS 2.0 is our most recent version. The version that we started with was back in 2003, 2004 was VSTOPS 1.0, and we made some changes to the adaptive filter that made it a little bit more reactive. We have a mode now that allows it to round to the nearest tick, so that it will, if you're trading futures, it won't, it'll only go to the nearest tick. And we also fixed an issue that we found in the first version where it produced a transition dot, but it didn't actually transition. It occurred in very, only in a few conditions. So those are the major improvements that we've made in VSTOPS since it had started. But 2.0, I think we've had that for about the last 2 years, so I think it's the same version. Is it a price? Sal asks, is VSTOPS a price action strategy? Yes, it is based on price action. It is based on adaptive volatility. So it is basically a binary system. So we're looking at long or it's always kind of long or short, but it's not in the market all the time. We can use money management to change the way it approaches the market, and it doesn't enter the market immediately. So in other words, if you have, this is it's really designed to be a full-featured day trading strategy. We've done a lot of work with day traders, and day trading strategies are different than a basic strategy. There's definitely some filters that are built in there that are very specific to day traders, such as time. Okay, I have a question. Can your software tell if a 6 Renko works better than an 8 Renko, as an example, like it does with minute charts? Mark, that's an excellent question. We use the strategy, the NinjaTrader strategy analyzer to look at that. So as long as it's a feature that we can adjust in the strategy analyzer, yes, you could optimize on it. To be honest with you, I've never done that particular optimization between 6 and 8, so I'm not sure if we can do that. But you could manually go through, if you have your other settings, you can manually go through to find out what Renko is the best for it. Fran asks, does VSTOPS ProTrader use NinjaScript strategies to automate? The answer to that is yes, it does. It uses a NinjaScript strategy. We have, it's based on the same type of adaptive volatility that the indicator is based on, and it's programmed in both NinjaTrader 7 and NinjaTrader 8. So Mike asks, can you clarify how to determine in-sample versus out-of-sample data? The best way I could do that is if we had 5 years of data available to us. What I would say is I'm going to do all my testing and optimization on 3 years of data. So I would use the most recent 3 years of data. And so in doing that, it saves that last 2 years of data as what I would call out of sample. So all my testing, all my optimization would be on that 3 years of data. And then when I'm happy with that performance, then I'm going to expose it to those last 2 years. So that's going to give me my comparison. Now you could argue that if I did that enough, that out-of-sample data would actually become in-sample. So we want to use that out-of-sample data as infrequently as possible. And the ratio that I use 2/3 of any available data set that I have. I use 2/3 of that for my in-sample and 1/3 of that as my out-of-sample. So that's my ratio. 2/3 is in-sample that I test on, 1/3 is the rest that I don't test on. And then I also want to see about 180 trades to really get statistical significance in my testing. Okay, I have 2 more questions here, and then I think I'll turn it back over to Ryan. Mark asks, or excuse me, Rolf asks, could you clarify? I just answered that one. Pietro, I have an automated system with Ninja. It is possible to another like yours at the same time. So this is this automated system works on your computer. So in other words, you can use this. And I don't really want to call it a system because it's not a black box system. It's a strategy template. When you get this and you put it on a chart, it's expected that you're going to have to do some homework to get the performance that you want out of it. It's not a plug and play. So I want to be very clear that this is not a product it's not a strategy that you just turn on and go. You've got to do some work with it. You've got to, it's really intended for self-directed traders who are willing to put in some time and learn about some aspects of automated trading. And the last one question I'll take here is, Fran, does the VSTOPS ProTrader use Ninja's ATMs or trade its own trade management program? Excellent question. It actually trades its own program, so it doesn't trade through it basically trades on its own algorithm. So you would enter this in as a strategy. You could turn it on, and then it would generate trades that way. Well, excellent. I want to, first of all, apologize for being cut off during the presentation. Not much we can do about the weather here, but I also want to thank everyone for participating today. I definitely want to wish everyone great trading. I want to wish everyone a happy May 4th, and may the force be with you guys. And as I sign off here and turn it over to Ryan, I'll go ahead and send you my email. If you guys have any questions, you can email me directly or go right to our website at baranalyzer.com. Once again, thank you very much. And
All right, this is Ryan from NinjaTrader hopping back on, and I would just like to give a quick outro here and give a special thank you to our presenter today, Lee Leibfarth of BART Analyzer, for his great presentation, even with the disconnection. Nobody left the room, so it's good to see. NinjaTrader ecosystem is pleased to sponsor our weekly vendor events as a value-added service for our clients. And if you find value in any of our events, we would hope that you would attend them on a regular basis. We do have NinjaTrader free training webinars every week, and you can join them live. Here's a link to those. And we would like to remind everybody in the room that the information presented today in this presentation was that of BART Analyzer, or Power Zone Trading, and not of the NinjaTrader group directly. So all information that was presented was for educational purposes and should not be construed as any sort of trading advice. And again, we appreciate everybody for taking your time out of your schedule and spending time with us today. I hope you enjoy the rest of your day, and we would hope to see you in our future webinars. And we wish you all happy trading from everybody here at NinjaTrader. Thanks.